Hi, and welcome to another product knowledge video. This product knowledge video explains errors and omissions liability insurance. The, the presenter is Robert Bob Sargent. He's the president and CEO of Tenant Risk Services. That's a specialty wholesale broker, underwriter. Bob's pretty well known in this industry because he was the president of NAPSLO, which is I won't go into the details of that, but that's one of the top two organizations for wholesalers, general agents, and so forth. He's an excess and surplus lines authority, and that's for sure. Okay, and we're going to, Bob, will just give us an overview here of what is errors and omissions insurance.
Thank you, George. Errors and omissions is also known as E&O or professional liability, or for certain segments, malpractice. And errors and omissions insurance is designed to protect professionals or professional organizations from financial loss from their negligence, their errors or omissions.
I see. Well, who's the normal people who get coverage? I mean, who are covered?
Well, some of the sort of more obvious examples would be doctors or lawyers will purchase errors and omissions or malpractice coverage, but all different kinds of consultants and a whole bunch of other types of professionals also purchase E&O. And there is some complexity to this segment. It is important to have your insurance representative give you the background and explain the process and what you need and that kind of thing. And this video will provide some of the basics as well.
All right. I am intrigued to know what it covers. How about that?
Well, as we mentioned, E&O protects the insured from allegations of wrongful acts or claims committed as a professional of some sort. This means that E&O responds when there is a claim, typically when the professional fails to meet, the client's expectations for some reason. Sometimes there's an error or omission, a mistake, and obviously a claim is warranted. But sometimes there's not. A claim may still be made if the client is unhappy, and a legal defense is required even if there's no real error or omission. For example, a lawyer may forget to file some papers which could result in an issue, say a default judgment, or, for example, a home inspector may do an inspection and then subsequent to that a deck or something collapses. And even though the inspector pointed out in their report that there might have been a weakness or some repair needed, or that there were limits to the scope of the inspection, they can still be brought into a claim. And in our world of E&O, there are many different segments based on the type of professional, and lawyers and home inspectors and doctors are a couple. But across the spectrum, there's quite a bit of variability in exposure and in the coverage provided.
Let me ask you something. What's a subsidiary? I mean, I think I know what a subsidiary is, but give me an example of a subsidiary if you can.
It would be a company that's owned by another company. So the parent company may buy cover, but a subsidiary.
All right. Well, let's go. I got it. Thank you. Let's go back into what's covered or what's not. Some points here.
Some key points to keep in mind is that the specific professional services are quite varied in the exposure that goes with them, and therefore the policies that are required for each, say, specific profession are actually a little bit different. So it's important to make sure that the coverage that an individual or a professional or an organization has the right coverage for what they do. I guess the second point would be that E&O is not the same as D&O, or directors and officers coverage, and sometimes we see people buying one and thinking they have the other, and that's not correct. E&O and D&O are quite different, and in fact, D&O in most cases specifically excludes claims for professional services. And then typically E&O is bought by its own, but every once in a while it's combined with other coverages, and we can talk a little bit about
Well, thank you.
there.
I will make one point here, Bob, and you have on also on the money markets uh, pages. You have a very good explanation of D&O, and so anybody who wants to make sure you know the difference between E&O and D&O, directors and officers, errors and omissions, can go back on the our website and see, and you'll find that there. Okay, Bob, let's talk about some other points. Uh, who needs it? Who needs E&O?
Well, certainly all professional organizations who are doing work for clients will need E&O. As I mentioned, the exposure varies widely. Individual professionals as well should be buying it generally. I mean, you could have an individual who's a consultant or maybe a trustee, something like that.
Mm-hmm.
And then sometimes is actually required by clients. So you could have a lender requiring an escrow agent to buy E&O, or in many cases, technology companies require their consultants to show evidence of E&O. And there's lots of different segments. I mean, the way we sort of look at the business is that the major classes are healthcare. So you have physicians and other providers like home health or surgery centers or facilities, something like that.
Mm-hmm.
Certainly the major classes that everybody is familiar with: lawyers, architects, engineers, accountants. In the real estate segment, there's quite a few different types of professionals that all buy errors and omissions, including agents, which everybody thinks about, real estate agents, but you also have home inspectors, appraisers, title and escrow agents, mortgage brokers, that kind of thing. Technology is a very big segment, and as everybody knows, you have the typical technology providers like software developers, website developers, that kind of thing, but then you get into ISPs or internet service providers, technology platforms, and as everybody's aware, we're moving into the sharing economy and lots of different technology-based services that all need professional liability, in some cases very complex. Consultants is another major segment that runs the gamut, everything from, say, a marketing consultant to specialists like oil and gas specialists or something like that. So, and these segments are important because the exposure for each of these is quite different, and therefore the coverage for each of these varies as well.
Yeah, I can imagine. Can anybody get it though? I mean, is it just anybody? Well, you just said the exposure varies, right?
So the exposure varies, and anyone can get it. Obviously, there's some professions and some organizations within the segments that are higher exposure, what we would call sort of non-standard or harder to place.
Mm-hmm.
It doesn't mean that kind of organization is bad or that there aren't any insurance alternatives. It just means that the underwriting process may be a little bit more complicated. In some cases, the premium is more.
Premiums are. I kind of figured that was going to come around for that. Anyway, yeah, right.
Well,
policies.
It matches the exposure.
Oh, I know it does. I know it does, but it's a good explanation. Go ahead. Okay, forms vary. What's that mean?
Well, as I mentioned, the policy forms vary based on the exposure for a specific class. To start with, say, a physician's policy will be different than what, say, a consultant or a lawyer might have.
Mm-hmm.
But then you get into classes where it's not crystal clear what they do. Consultants is a good example because each consultant may have a unique set of services and set of clients, and in those cases it's very important that the scope of coverage, what we call the scope of coverage, or what the specific services are that are covered, is clear and is covered in the policy. And then you get specialty situations, as well. As I mentioned, consultants. So a consulting engineer would have very different coverage needs from a marketing consultant, and obviously Your insurance representative, with support from a specialist like Tenant Risk Services can do the assessment of exposures and the coverage needed.
Yeah, I understand exactly. What about combining it with other coverage automatically? It does it, or isn't it?
Generally, no. There are some cases in which some other coverages are combined with E&O in some fashion, but I would say typically that's not the case. The exception would be for certain types of accounts. Sometimes general liability is included. The problem there is that in many cases the general liability is not as broad as what might be found in an office package policy, but it's available. Cyber risk is sort of a trend today, including some form of cyber risk insurance with E&O. But generally, we see that the cyber risk that's included is not as broad as a standalone policy, and in some cases may be very narrow. So again, this is one of those things that needs some due diligence to ensure that the right coverage is being.
All right. Tell me if there's everything is covered. Is it always covered, or what's not covered? I guess I should be asking.
Well, like any policies, there are things that are not covered. Sort of the typical ones, as you see on the slide there, would be any kind of criminal or intentional act that's not covered. In how that's excluded varies by policy, but for an innocent person, generally the coverage will still remain, but the individuals that are involved in the criminal acts would not be covered. Bodily injury and property damage is what we call in the business BIPD, is generally covered or not covered based on the specific class. So, for example, architects and engineers or healthcare accounts generally have this bodily injury and property damage coverage excluded, but then you get some types of professionals where that's not in the coverage. And so consultants would be one example where typically there would be no bodily injury or property damage, but that can be an issue because there are some consultants. For example, we've seen agricultural consultants that need that coverage, and that takes a little bit of effort. So again, talking to your insurance representative and a specialist is important in that kind of case. There's a couple of other exclusions that are sort of important. Insured versus insured comes up. This is a standard exclusion where the policies don't cover one insured, say an employee suing another one, and they're excluded. But there are situations where an attorney, say, for contractual purposes, might ask a client be added to the insured's policy, and that's generally not a good idea because of this insured versus insured exclusion. And that's something where we work with our clients and the attorneys in straightening those kinds of situations out.
All right.
Contractual liability, another example, in E&O, the typical wording says something like a liability assumed under contract that would not otherwise apply is typically not covered. And the idea there is just to make sure that the insurer is not picking up liability of others that's just transferred through a contract and has nothing to do with the professional services. So sort of a technical one. And then there's some other sort of specialty exclusions you might find. One thing is making sure that, the doctor's not acting like an accountant or those kinds of things. But those tend to be few and far between.
Well, let me ask about the limits. What are the limits, or what should you have and what shouldn't you have on the thing?
Well, it's a great question with no easy answer.
I bet. That's right.
There's generally no formula to what's sort of the adequate limit number. I think the key question is what the insured or the buyer feels is necessary to balance the cost with the protection. I would say that $1 million is generally a minimum sort of base number that any organization should carry. And then it generally runs up from there based on size, perceived exposure, and sometimes customer expectations. So You know, a client may have a contractual requirement, say, of $2 million or $5 million or something like that. We see that from time
Obviously,
to time.
yeah.
Yeah, but you know, I think the key answer here, like a lot of this, is that your insurance representative with a specialist can provide a general idea of what peers might be buying, what the perceived exposure might be, and combine that with some expectations
I
of
got you.
clients.
All right, well, let's talk about how to get it then. How to get the errors and omissions insurance. What's the process?
Well, the process is pretty straightforward, and in many cases, you know, you might be familiar with this, but the underwriter needs to get the full story, and that's done through an application. So there are many different applications that are specific to certain types of professions, but the underwriter needs an application, and in many cases, particularly for smaller organizations, you know, we might recommend including a resume or bio, not too long, but to provide some background on the principal or principals. And you know, sometimes an example contract is helpful for certain types of professions, like a consultant. Applications, as I said, are not all the same. They vary by profession. And I guess one key point is applications in errors and omissions or professional liability are representations of the insured and must be signed. So it is important that the information in there is accurate, and this is important. So again, your insurance representative can help through the process.
Yeah, and I think it's important for people to know too that the insurance representative, the agencies that are on money markets and have this program, have their own errors and omissions, and of course that's demanded by their insurers. How about you as a general agency? Are you aware of or require E&O when you work through an agency?
Absolutely. I mean, everybody in our business has errors and omissions, is required to do business with other, you know, parts of the business, whether it's carriers or wholesale brokers or underwriting managers. Pretty much everyone is required to carry errors and omissions.
Kind of figured that way. I figured that would be happening. Okay, let's summarize. You summarize. How's that?
Sure. I think the key takeaways are is there is a bit of complexity to both the process of getting coverage and the coverage itself, and it's important to get that right. You know, as we talked about, exposures are not all the same, policies forms are not all the same, and your best counsel in this process is your insurance representative, and you know, a specialist like ourselves that does a lot of this every day. I always want to mention also about claims. You know, it's not just when a profession gets sued, but if they think there might be a situation which could lead to a suit, it's important to talk about that, report it to the carrier, talk with the insurance representative, and do it quickly. Delaying that process can cause problems from a lot of different angles. So I always mention as well, report all claims or claim situations quickly.
Well, thank you, Bob. I think you've given us a good short overview. This is a very complex product, insurance product, really, I think, compared to a lot of others, don't you? You just got to know the territory, boy. You really have to get into this thing because it's, well, it's complicated. I guess that's the best way I can say it. So any other last thoughts?
No, that sounds great. Thank you, George. Appreciate the opportunity.
Well, we do too. And if the rest of you go back to your agent now who sponsored this product knowledge video, and if you have a possible account with them, go back and they'll explain it. If they need more help, they'll go to Bob. So thank you again, Bob, and I'll look forward to doing the next product knowledge video with you sometime in the future.